Whether you're looking to buy your first property or grow your portfolio, like the reason you may have not started or had that success yet is you might just be following the herd. There's so many people telling you so many things to do. Instead, just follow the fundamentals on how to build a property portfolio. It might sound boring, but it's true, because if you want to build a dependable, sustainable property business, and let's face it, a property portfolio is a business, you should stick with the fundamentals. In this episode, I stick with the fundamentals. We go over the fundamental question: does a house or an apartment make a better investment? Houses can offer better long-term growth, but they also come with drawbacks. Apartments are popular with investors. They're more affordable, but are they really worth it? So if you're starting out and you want to make confident investing decisions, even if you think you already know the answer to this question, then don't miss this episode because we'll be going detailed on the pros and cons of houses and apartments. Enjoy, guys. Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you. Which should you invest in, an apartment or unit or a freestanding house? Let's get going. So the pros and cons are, first of all, houses. Number one, pro is houses almost always have better capital growth. Why is that? I get it, right? Most investors err towards apartments because they're cheaper, right? We're going to get to all that. And a lot of property spruikers try to sell you, off the plan apartments, all this kind of thing. But the capital growth is almost always better for houses. The reason? Because houses have land. 101 property investing, it's land that appreciates, not the building. When you buy an apartment, yes, you are buying a portion of land, even if you're on the 50th floor, right? You're buying a 50th of the block of land that the apartment tower is on. But that's so minuscule, insignificant. Whereas if you're buying a 500, 600, 700, 800 square meter block of land, a house, that thing is rare. It may not seem rare to you now, just like maybe 20 years ago, suburbs in Brisbane didn't seem rare to people who were buying in Brisbane because it was old country town. But things become more and more scarce and valuable. Those things are land. Quick tip, if you want to get rich slow, buy land. Okay, so that's the number one pro for houses. Second pro for houses is that there's an opportunity to subdivide and renovate. Okay, you can split the land, you can subdivide it, which means you take one title and you put it onto two, effectively building two houses. You can do big renovations, structural renovations, cosmetic renovations, all these things you can't really do in an apartment. You're going to be well, PK, a unit block, I can strata title it. Yeah, you can, but the upside isn't as much as if you had subdivided a piece of land. The upside isn't as much if you had renovated a house. Yes, you can cosmetically renovate an apartment. You can put a slightly updated kitchen, stove, you can paint it, new flooring, but you can do so much more to a house. You can structurally modify it over time. You have that control in order to add value. And adding value, or I should say solving a problem, is, once again, quick tip, a really good way to get rich. The more problems you solve for other people, the more money that you make. That's the definition of a business. You can solve more problems with a house because it's standalone, you have control, as you can with an apartment. Number three, pro for houses that there's zero body corp, or like there's zero admin fees, there's zero fees really that you need to give to other people. I'm talking, of course, not the government. The council will always take their clip, right? But there's no like, admin levy, all these types of, body corp that really erode and oftentimes throw at you unforeseen, unpredictable, kind of headache kind of bills. So I don't like those things. The number 4 pro of buying a house is that they're, basically consistent rental returns. The thing with the rental market, right, is that houses, generally over time, the rents just keeps going up and up and up and up. But apartments, especially high-rise apartments or medium-sized towers, rents can often go up and then they can come down. It's very volatile. It's got a high beta. It's very cyclical because apartments are very easy to build and there's unlimited that you can build because you go build upwards towards the sky, right? And the more apartments there are supplied to the market, the more glut of supply that exists, and therefore oftentimes tenants have far too much choice and your rents don't rise as much. So that's the 4th pro of houses. Now there's got to be downsides to houses as well. The first one is that there are lower rental yields sometimes. Okay, so you often be thinking about apartments and you'll be like, oh yeah, I can get like a 6.5% yield or 7% yield, but that's fairly rare on a house. Like that is a true downside of a house. The yields on average are lower than apartments, and one reason is because tenants, they don't really pay for the backyard, the front yard, the side yards. They pay for what they live in, which is inside. And in a unit or apartment, everything that you have is inside. There is no front or backyard or anything like that. So from a proportion perspective, all of your asset is generating income, whereas in a house, only some of your asset is generating an income. So that's one downside for a house. The second is that there's sometimes higher maintenance costs and upkeep. Now, naturally, a 4-bedroom, 2-bathroom, 2-garage house is going to be bigger than, let's say, even a good sized 2-3 bedroom apartment. It's just, chalk and cheese. You can't really compare. So the maintenance costs that I, across my properties, I normally try to budget like around $1,500, maybe $2,000 a year for houses. I don't have any apartments. And that's kind of what it's averaged out to over the last 11, 12, 13 years, right? Per property, about $1,500 to $2,000, whereas an apartment, it would be much lower. The next downside with a house is that there's higher entry costs. Like the average house price across Australia is, above $600,000-700,000. The average unit price or apartment price across Australia is probably under $500,000. So that's another downside of a house. But the disclaimer or the proviso or the devil's advocate to that is that that's not always the case everywhere. So like, let's say you're a brand new investor and you're sitting in Sydney or Melbourne, you're like, oh yeah, like Docklands, I can buy something for $500,000-600,000. You might be thinking in Parramatta in Sydney, I can buy something for $500,000-700,000. There's no way I can buy a house in Melbourne or Sydney for under $1 million. That might be your mindset, but if you're willing to be an interstate investor, a borderless investor, as they say, you can still pick up $400,000 houses in places like Perth, in places like Adelaide, other places around Australia. So the point is that overall, yes, units are cheaper, houses are more expensive, but do you really think that in 5-10 years time, you'll be able to buy a house under $1 million in a capital city in Australia? I really don't think so. So right now, I just don't see this as a huge downside where houses can be procured for basically the same price as apartments or units, but you just need to look outside Melbourne, Sydney. Okay, now let's go through the pros and cons of apartments. Okay, so the first pro is lower entry costs. We just covered that, how houses are oftentimes more expensive, units are less expensive. That's obviously a pro of apartments. The second thing is shared upkeep costs. What I mean by this is in a house, all of the costs involved are entirely on you, right? Because you're the owner. But with a unit, like the the body corporate, yes, I just mentioned it, you have to pay the body corporate. The body corporate will have a sinking levy and everyone contributes to that. And so if there's like a massive problem in the driveway, or like the lift needs changing, or like, something that impacts the entire block of units or apartments, everyone chips in. And so it's not like you've just broken the bank, if you know what I mean. Like, let's say you need to completely repaint the block of units or the apartment tower, you probably chip in like $500, $1,000, $1,500. Whereas if you needed to completely repaint your house, these days I just did it. It's not going to cost anything under probably $5,000, $10,000 for your average house, right? So, everyone kind of chips in to maintaining an apartment block, and therefore the cost is spread more evenly across multiple years. It's like jam on toast. It's not lumpy if you know how to spread it right, whereas with a house, it can be like, boom, $5,000 in a year and then minuscule in future years. So it's much more predictable in a unit. The second pro of a unit or, an apartment is, or the third one I should say, is that there's actually potential for multiple assets. What do I mean by this is that, you can buy a super cheap apartment, let's say for $300,000, let's say in Brisbane or other places, and then you can buy like 2, 3, 4 of them very quickly. So you can be like, oh yeah, I've got multiple properties, and diversify across Australia. It's much more easier to diversify if you're buying cheaper properties, because your money goes further, right? You can buy more units or buy more apartments. So the ability to buy multiple assets and diversify is better for apartments or units, but comes back to the original point. What's the point in diversification if the thing isn't going to go up in value as much as a house? Do you know what I mean? The fourth upside for units or apartments is that there's oftentimes projected higher demand. Now, what I mean by this, I don't mean higher demand, so higher capital growth. What I mean by this is because prices or rental prices are cheaper for units or apartments, it's oftentimes easier to rent it out. Now, that's not always the case, definitely not the case in like high-rise towers where, there's 100 apartments that look just like yours and there's always 20 for lease or for sale at any one time. But what I mean is like let's say you've got a unit in like a block of 6, right? Your ability to rent it out is going to be more than a house next door where the lease is going to be $800 a week, whereas yours is going to be $400 a week. Just because it's affordable means that there's likely for more demand for that type of product, just because more people can afford it. Do you get what I'm going with this? It's a little bit lower risk from that perspective, but I would almost say that pro or positive is redundant in this environment across Australia because, let's face it, it's a rental crisis. It's not hard to rent anything almost right now. Now, the downsides of apartments, to finish this off, is we mentioned body corp fees. Body corp fees suck. It's really bad. Like I mentioned before, you get higher yields, right? Higher yields for apartments. Let's say you get a 7% yield. You almost have to shave or truncate 1% of that gross yield off, because that is what the body corp will be costing you, $1,000, $2,000, $3,000, $4,000 a year, or even more. So your yield on a like for like, apples to apples basis ends up being not so much better than houses anyway. The other downside, the second one for apartments, is that there's really lower potential for capital growth. Now, that's not really just something I'm making up. I just don't even listen to me, right? I always listen to the data. The data is more important than what you think. The data is more important than what I think. The data is cold, hard, objective facts. And the reality is, if you take 2 lines, one for house price capital appreciation, one for unit capital appreciation over 30 years, units just don't even make the grade. There's not even a race, right? Houses just completely eclipse on capital growth terms apartments almost every single time. So that's kind of like the second downside of buying an apartment or unit. The third is a lack of control over renovations and things like that. I mean, even just like getting a hammer and nail or like some sort of machinery, and it's going to disturb anyone. There might be complaints. You might need to get approval to even do, have tradespeople in, do some work. So it's like a big pain. And the last one is that apartments can actually be harder to finance, okay? So especially like one bedroom apartments, studios, a lot of lenders don't love that. They won't even give it 80% lend. You might need to chip in 40% deposit, 30% deposit. They just don't like this kind of shared housing, studio, student accommodation, boarding houses. Lenders, banks, they don't like that. So it's oftentimes harder to get finance for apartments as opposed to houses, where generally like families want to live, they want to rent it, right? Couple of kids, obviously a couple of parents or mum and dad, what have you. So like banks like that, there's more surety. I did promise I'll give you my conclusion. It's probably self-evident as I went through the episode right now, but the conclusion is, much like myself, across 12 properties right now, I have 0 units or apartments. This townhouses are kind of their own beast, but really houses win every day of the week. And if you're brand new to investing and you're sitting there in Sydney, Melbourne, you're like, well, PK, I'm not a millionaire. I don't make like $500,000 a year. I can't buy multiple houses as investment properties and acquire a portfolio that way. I have to buy units. And by the way, I saw this spruiker and I saw this brochure and I was talking about this amazing unit block on Eagle Street in Brisbane, or Darling Harbour in Sydney, or Docklands in Melbourne, and it's growing, it's got a pool and a gym and it's brand new and depreciation. But like, seriously, understand the facts that I've just shared with you, because you can buy something just as cheap interstate and it will make you more money in the short term and the long term with better tenants, a freestanding house. Almost 100% of the time, I would say, well, every rule is there to be broken. There's always exceptions, but almost 100% of the time, buy a freestanding house as opposed to a unit or apartment, especially in medium to high-rise towers. Don't be lured in by that. I hope you did enjoy that, and I just want to say as well, thank you for leaving a review for those of you who have done on Spotify and iTunes. I really appreciate it. And if you really want to level up your knowledge, join the Facebook group. There's 25,000 people just like you from this community in that Facebook group. The link is below, is completely free. And then, sometimes listening to a podcast is kind of like, there's not enough reciprocation. It's kind of like there's me behind like this wall, and then there's you guys on the other side of that wall. If you join the Facebook group, we can actually have open to a dialogue about these topics. So the link is below. Join that. Obviously the YouTube channel is there as well, and let's continue the conversation. Lots of love. Catch you later, guys. Bye.